Hi, Sarah. How are you?
Good, good. How are you, Dahlia?
Oh, today is one of these days where we're getting tons and tons and tons of calls. July 13th, a day to be marked, where the Bank of Canada raised interest rate by 100 points. So we've been getting a lot of calls from investors and asking questions about what does this all mean and should they lock, should they not lock? So I thought, you know what? Let's talk to some great investors on the street like yourself and get some input around how you are navigating this environment that we're in. You have a large portfolio, you are on variable rates. How are you managing the cash flow situation and what are you doing given these rate increases?
Yeah, great question. And you know what? I don't think that there's been this big of an increase. I think I was reading and since is it 1998, was it? 1998 was the last big increase, the big jump. And I think, looking at the social media, even my messages were blowing up. I couldn't even imagine what you were going through today with the panic. And it's one of those things where unfortunately, I think people panic so easily and they let emotion make a lot of their decisions, and sometimes it's not always for the best, and oftentimes you mix emotion with panic and you start to think, oh my god, the sky is falling and the world is ending and you got to sell everything, and but I don't think it's the case. I mean, again, I guess what I'm looking at it from my portfolio standpoint, I think I was always a big proponent on buying for cash flow, right? And so I was never the type of investor that was buying these, $1 million homes and putting a tenant in there and cash flowing negative $1,000 or two, whatever it is, right? And so it was very important. This is why there's investing and there's speculating. I didn't want to buy these pre-construction properties in the hopes that I was going to sign them for $100,000 lift on paper. I always bought with a plan to have some cash flow and multiple exit strategies. And I think for me, yeah, I like the cash flow won't be as good with the rate increases because I am pretty much, I think, minus, I want to say 90% of my portfolio, maybe 85%, is variable. However, the cash flow that I've had on these properties with the stress test that you and I work through, we weren't necessarily just saying, okay, if the rates stay the same, there's some cash flow. We've looked at, okay, what if rates increase because essentially they do over time. They were in a historical low. So are there opportunities? And so I'm not personally panicking. Is there going to be less cash flow temporarily as they try to curb inflation? Absolutely. But I think it's a great buying opportunity. And in fact, we're still making offers and we're still negotiating, and it's a good time to buy.
Okay, excellent. So you're not panicking. Your cash flow is impacted, but you're not panicking because you've always bought with strong cash flow in mind going into the deal. So there is cushion there to handle a rate increase. Is there anything you're doing to manage a reduction in cash flow right now? Any strategies you're utilizing? Like, are you shoveling any debts around? Are you looking to rent certain things as short-term rentals to offset, certain cash flow reduction? What are you doing on that front, if anything?
Yeah, that is a great question. And actually, it is part of the strategy, and it actually was part of the strategy even before the rates were increasing. It's just because the prices of properties were getting, harder to cash flow if you're just doing a single and even a duplex. So a lot of the stuff I've been currently buying were properties that could be created into like 3 or 4 units, or some bigger multifamily or some bigger, commercial to residential conversions as an example. But the single families just didn't work anymore. So I hadn't been doing so much of that. Duplexes, if they didn't cash flow as well, they were actually becoming midterm, or, again, putting it on Airbnb for that increased cash flow. But I still think so personally for me, like what I'm currently doing, I'm going to be taking, so let's just say you've got, a single family and you're converting it to, 2, 3, 4 units. Usually it's going to be 3 or 4 units. The units that are new, and again, this can change any time, but essentially the units that are new, and newly built are not subject to rent control. And the units that were currently existing prior to that, like the main floor as an example, that would be subject to rent control. So what I'm doing is I'm taking the rent controlled unit and I'm actually going to furnish those, put those into the midterm rental market. So people that are in between houses that want to stay for a month, 2 months, 3 months at a time, and increase the rent that way. And then the ones that are not subject to rent control, then I'm going to put longer term tenants in there because I can increase market rents. Again, government can change that at any time, but that is going to be the strategy moving forward.
Okay, excellent. Where do you see the opportunities ahead? A lot of investors, or I wouldn't say a lot, I don't want to generalize, but some investors are very scared right now. Scared that prices are softening, scared that rates are going up, where other investors are seeing opportunity. And I'm assuming you are one of the investors who are seeing opportunity ahead. So what does that look like for you?
Yeah, absolutely. So, I mean, I love conversions. I love the BRRRR strategy. I still think there's an opportunity. It's just you got to convert into more units these days. And I'm still looking at that. I think it's just now easier because there's not 20 offers on every single deal. There's likely an opportunity to negotiate the price even potentially less than what's listed, or be the only offer. And now finally put in conditions, due diligence, and what you need to do. Potentially a vendor take back. We had one recently, they were willing to do VTB for 75% loan to value. So I think there's going to be a lot more creative strategies that you can do. But I think it still is going to be, I think the next year or two will probably be rocky until rents catch up. I think the rents, personally, this is just my prediction, I don't have a crystal ball, but I can see rents going up 20, 30% market rents year over year. And so I would say be very careful with putting long-term tenants that are going to be there for the long term. Maybe look for somebody who's, looking to buy a house in the next couple of years, or somebody that might be, not a lifer tenant, so that you can reset those market rents, or think about that midterm rental strategy, or think about the short term. I would just say the only thing with the short term is I know some cities like London and Hamilton started to crack down on some of that stuff, and it might come around. So anything less than 20 days, I think there's going to be more buy. But there's a midterm rental market to be able to do that with, executives, companies looking for places for 1 to 3 months. If you're nearby a hospital, you've got, maybe families visiting. So there's lots of different opportunities. I think, that's not saturated yet. But I still think there's opportunities. I think we're being a little bit more cautious now on the ARV, right? Just because we don't exactly know where that's going to end up. So there might be, more initial cash maybe left in the deal on the first refi. We might have to wait till the market comes back to do the second refi. And so maybe instead of just one refi to pull out the majority of your cash, you might do 2 over time, but it's still a long-term strategy. And so, we're not flipping. We're not, assigning contracts and hoping to make money on appreciation. We're looking at it from a cash flow standpoint, a mortgage pay down standpoint. And ultimately, I think, if you're in it for the long term, this is why we do real estate, for the long term wealth creation, not the quick cash. You will be okay. But yes, there's gonna be a little, more uncertainty. I think there's gonna be a little less cash flow. And I think it's just going to be important that you are strategic. You run your numbers and you look at what, still makes sense. Because I think, if anything, even if the market goes down, there's still going to be people that need a place to rent. There's still going to be a high demand, I think, for many places. So you still have to look at the market fundamentals. Rates are going up right now. They're curbing inflation. Once that goes down, the rates are going to be, they're going to come down at some point, right? So
Yes.
It's just a matter of time. And, who knows, maybe the banks, and I don't know this, you probably know this more than me, but could it be possible that to help, and still ensure that people are able to afford things, could they do a longer amortization down the road so that payments, even with a higher rate, potentially equalize? I don't know.
There is potential on that topic, but it's not firm.
Yeah, I don't.
It's not
Okay.
firm.
Yeah.
But I love how you've highlighted risk management in terms of investing, changing the strategy, and also you given the market conditions, but you're not stopping, you're not freezing. And you're also tackling income. You're looking for ways to increase rental income on your properties. And on the mortgage side, we are offering and coming out with strategies to manage debt and to help improve cash flow by managing the debt tool. So all of these things would help, in my view, investors ride this wave that we're riding.
Mhm.
What is one last tip you would share with investors to wrap up? If you were to share one tip for the market ahead, what would that be?
I think right now we're in a panic market, right? Where everyone's panicked, everyone's freaking out. I would just say take a step back, look at it from a long-term perspective, and don't make any short, quick decisions that you're going to regret, because even the market can, if the real estate market goes down 20-30%, let's just say that happens, maybe 40%, I don't know. I don't think so, but you never know. It'll come back, just hang on to it. Make sure that you cover your payments with cash flow. And hopefully, if you're not in that situation, talk to somebody like you, mortgage broker or whatnot, but be strategic in the types of investments that you're picking. This is not a good time, in my opinion, for flips. Again, could change in a year, could change in 6 months, but today I would advise against doing any flips or anything without an exit and then a backup exit. Ensure that you've got cash ready, because I think there's going to be some great opportunities. And you know what, if I lose 20% of my equity, 30% of my equity, I mean, look, it'll take a couple of years, 3 years, 4 years, you never know, but it'll come back. And so you look at that, history, the market cycles, what happened in 08, 09, it was crappy for a long time and then it got better. And so there's always going to be market cycles. We're just in a different type of market cycle. It has been gravy for the last 5 years, 10 years, everybody looked like a hero, but this is where the investors are going to differentiate from the speculators, and you do not want to be a speculator.
Fantastic. 100%. Can't agree more. And I love your message about not panicking. There is this hurricane, but sophisticated investors stand in the middle and they can make much better decisions when they're calm and strategic, like you said. And I remember 2018 when the stress test was introduced, some investors thought the sky is falling. And when the prices dipped a little bit, some thought the sky is falling again. And then COVID hit and some investors panicked. Oh my God, we can't do what we used to do. And should I sell the property? And you look back and hindsight is 2020. We all survived. We all managed. We all, made money in the cycle. And it's those who didn't panic that, benefited. So I love that message about staying calm, being strategic. And sometimes you may think, oh, this is the way to do it. But you talk to somebody else, you get a second opinion. They may open up your eyes on things you may not have thought about. And talk to an investment coach, talk to a mortgage broker. They can give you ideas that you may not have considered as an investor to manage both on the income side, the strategy side, and on the debt side. So Sarah, thank you so much for sharing your thoughts with us today and for jumping on this call on a very, very short notice.
Thank you so much for having me on, Dalia. And folks, your team is super important, especially in navigating through these tough times. So, Dalia, you've been on my team forever, and thank you so much. You and your team have been wonderful. So if you don't have a good team in place, that's going to help you through the good, but also almost more importantly, through the turbulent times. This is where you've got to tighten up your team and have the right people to help you maneuver. Thanks for having me on.
Thank you. Take care.
Bye.